Pranjul Bhandari, Chief India Economist and Macro Strategist, ASEAN Economist, HSBC, joining in. Pranjul, great to have you on. And we've been talking for the last few months about where the pain has come in because of the trade deal, because of the lack of a trade deal or because of the tariffs. Would you say that the deal has come just in time before any huge impact of these high tariffs could be seen on the Indian economy? And what have you made of the contours of the deal basis on what is available right now in terms of information?
Yes, thanks for having me. It's a great day to be on your show. Yeah. And look, I was saying from the beginning that this 50% tariff was actually a big downer for India for just not the short term, but also the medium term. My sense was that people were not realizing that exports growth has slowed a lot. They were just looking at the dollar value of exports and saying, hey, that has held up, but growth was going away. And we are a country which wants growth. That was a problem. The other big problem was FDI inflows were not that strong to offset the outflows that we are seeing, and we were doing pretty poorly on net FDI. And I do think that the trade deal with the US is going to help on both those fronts. So my sense is that, yes, it's been a pretty good news so far. You know, it's been a great morning. But of course, there are a lot of details. I think we'll have to watch out for a few things in particular. One is, do we really need to bring down the oil imports all the way down to zero? Second is the $500 billion that we need to buy from the US. What is the timeline? What are the details? And the third is India's exports tariffs on US. If they're going to be down to zero, as President Trump said, is it going to be on all goods or will there be some exclusions? So I think these are some of the details we still need. But on the whole, my sense is it's very positive. Earlier, I was thinking that with a 50% tariff, growth could be 70 basis points lower. But now if this has been brought down to 18% tariff, I think the growth drag more than halves to about 30 basis points. I think that is good. In terms of asset markets, my sense is across all three, equity, rates, and bonds, we were underperforming the EM index for the last 1 year. And a lot of it was because of our own domestic issues. Less growth certainty and also tight financial conditions. I think both of them are getting addressed right now. Tight financial conditions by the RBI and the growth certainty part because of all the trade deals we are striking. So I think for all three asset classes, you know, there could be some reprieve in the next in the foreseeable future. And most importantly is the long term. The long term is important because I think we finally have a growth strategy. It's not just about the India-US trade deal. It's the fact that in 1 year we've got India-US, India-EU, India-UK. We've got New Zealand, Oman, we have improved relationships with China. We are cutting down customs duty. We are bringing down non-tariff barriers. I think we are finally coming together with a new growth theme, which is rise in exports. And, you know, maybe we can also discuss about what the budget did for this. But I do think that things are coming together, and that is what is exciting, not just the US-India trade deal.
Pranjul, the nature of the news is such that the tendency is to focus on the biggest piece of it. And so therefore, budget seems like a long time back, right? Even though it was over the weekend. But having said that, I do want to ask from an economy standpoint, the argument that was made, as is usually the case when things were not going right on the US front, is that the implications for economic growth are not terribly significant. But that becomes a tailwind now. I'm just wondering what the knock-on effects would be. Assuming that the rupee continues to strengthen a little bit, liquidity pressures perhaps ease a tad bit, the current account starts looking better. From your perspective, will you have to adjust your estimates at all?
Well, look, yes, if I had a low growth number for FY27 because I was worried about the trade deal with the US and now it looks more certain, then I will have to change my growth forecast. Broadly, I would think it would be about 30 basis points more than I was thinking before. If I was going with something close to 6.5%, I think it will now be closer to 7%. So I think that is going to be sort of like one growth change that I make. But I also must say that there are other changes I will make. For example, I think the balance of payments could look better now. The trade deficit slightly smaller, inflow slightly higher. So on the whole, you know, an environment which is supportive of the currency. I think even for the equity markets, higher nominal GDP growth, higher real growth, I think that combination could be positive for corporate earnings. So I would say generally across asset classes, I think things are going to become positive. I'm going to hold back a little bit on rates because they have a slightly different story. I think for them, the worry will be that if growth is going to be strong, then will the RBI have to help with all of these OMO purchases and all of that? So I think that will weigh on their sentiments. Will the RBI cut rates? I think that could steepen the yield curve. So, the bond market will take a little more time to rejoice. But eventually, if GDP growth improves, then demand for bonds should also improve. And eventually, the bond market could also benefit, though I think they're not going to be seeing this immediately. So across all asset classes, I think there is a change in sentiment. But as I said before, it's the long game that I've got very excited about, that India is doing all of these external sector reforms, not after 2 years, but after 2 decades. And I think that is great from a growth expectations front.
Yeah, though Pranjul, good morning, Neeraj. And I wonder if people are globally are just exiting bonds, why would there be a big appetite? But I take on board your point that with a delayed gratification, bonds could also come into the party. But rarely have I seen you sound so excited, Pranjul. You are fairly measured in your conversation today. Maybe just that kind of a day. I wonder if you are recalibrating your growth assumptions for starting Q4 itself, but for a better part of 2026 as a result of this and the previous 3 or 4 external deals that India has done. Could there be a surprise on the upside on growth in 2026?
Yeah, that's a great question. And the truth is that a few years ago, we were all worried about what is India's growth plan. We could tell you lots of small stories, but what was the big plan which drives growth in a major way for multiple years? And I felt like we did not have a growth plan. We could talk about 1 or 2 sectors like electronics, but we didn't have a full growth plan that could create jobs and take India to 7% plus growth trajectory. And slowly over the last 1.5 years, I think a growth plan is coming together, and that is what is interesting me at this point of time. We've always asked, and please listen to me carefully here. We've always asked that why isn't private corporate capex rising? We are asking this from 10 years. First, we said because balance sheets are stretched. They got clean, but that didn't help. Then we said corporate tax rates are very high. That got cut, did not help. Then we said we need public capex to crowd in private capex. That happened, but it did not help. Last year, we said we need a demand stimulus, tax cuts. That will help. We did GST tax cuts, but that did not help. I think through all of this time, the real answer was hiding in plain sight. The real answer was exports growth. We've never seen any country have good growth without seeing exports rise, because exports opens up a new market which you can cater to. On the back of that, you build up your infra, you build up your capex, you create jobs, and then you start this new demand in your own economy as well. We were missing that. That is how the US grew after the World War. That is how China grew for the last 30 years. We were missing on that story. So if we are going to be focusing on exports, or at least trying to focus on exports more than we've done in the last 20 years, that's got to be positive for me. Of course, competition is very high. I'm not saying that this is like a silver bullet and we're all going to get it right, but at least we are doing the right steps after a 20-year long wait.
Pranjul, we anyways hear you carefully, but I must say, this is a very different Pranjul Bhandari than what we've been used to interacting, and lovely talking to you today. Thank you so much for your time.
Great to be here. Thank you for having me.